Hello traders, you are welcome to this video and I especially welcome you back to the Forex Geek channel. Okay, in this channel we break down trading strategies, trading indicators and everything you need to know to level up your Forex game. Alright, however, in this particular video we are going to be diving into a powerful combination which is the RSI and the CCI. Okay, the RSI is short for Relative Strength Index while the CCI is short for Commodity Channel Index. Okay, I'm just going to be adding both of them to the chart right away. This is the RSI and this is the CCI. Okay, now when you use these two indicators together, they can give you an incredible edge in the Forex market. Okay, so you might want to stick around because by the end of this video, you are going to know exactly how to use this strategy to time your trades like a pro. All right, and as always, if you are enjoying the content, hit that like button, subscribe and turn on notifications so you never miss out on the latest trading tips. So let us get started with a quick overview of the two indicators which we are going to be combining, which are the RSI and the CCI. Now, the RSI is one of the most popular momentum indicators out there. Okay, it measures the strength and the speed of price movement and is primarily used to identify overbought and oversold levels, okay, or conditions. Now, typically, an RSI above 70 indicates an overbought market, while below 30 suggests an oversold market. Now, this makes it a fantastic tool for spotting potential reversals. Okay, now as for the CCI, it is another momentum-based indicator, but it works a little differently. Okay, this CCI indicator measures the deviation of the current price from its average price over a set period. Now, when the CCI crosses above 100, it signals strong bullish momentum. When it drops below minus 100, it suggests bearish momentum. Now, individually, these indicators are helpful. Yeah, they are helpful, okay? But when combined, they can provide powerful confirmations for your trades. All right? So why use these two indicators together? You might ask, why? Well, the RSI helps you identify where the market might reverse. Remember, it is a momentum-based indicator that tells you the strength of a trend, okay, and when the price is overbought and oversold. So the RSI can help you to actually find out where the market might reverse. Then the CCI gives you a better sense of when to take action. All right. Now let us just look at an example. Okay. Let us just say the RSI is in oversold condition. All right. But you are not quite sure if it is time to jump into a buy trade. That's where the CCI comes in. If the CCI crosses above minus 100 at the same time, it confirms that the market's momentum is shifting upwards. So this would have been a great time to buy after the CCI crossed above minus 100. So you're going to have a confluence. While the RSI is shifting upward from oversold territory above 30 level, the CCI on the other hand is shifting upward above the minus 100. So that is a confluence. And that would have been a great time to enter a buy trade. All right. That would have been a great time to enter a buy trade. Now, by waiting for both indicators to align, you reduce the chances of entering a trade prematurely. So it's all about stacking the odds in your favor. Okay. So now, when you want to use the RSI for this strategy, okay, after you apply the RSI to your chart, you know, with a standard setting of 14, right? 14 period, okay? For the CCI, you will also want to use the default setting. Let us look at that. The default setting is also 14, okay? All right, now these settings are versatile and work well across different time frames, all right? Now, as for your signals, okay, make sure that you always wait for the RSI to indicate overbought or oversold levels, that is above 70 or below 30. Then check the CCI For a buy setup, you want the CCI to rise above minus 100, signaling bullish momentum. And for a sell setup, you look for the CCI to drop below 100, okay, like in this case. All right, always double check what is happening on the price chart. It is very important. Is the market showing signs of a reversal? Candlestick patterns like hammers, engulfing candles, or doji can add even more confirmation to your trade. For example, in this case now, we can see this long legged hammer. This is a bullish candlestick pattern, and we can see how long legged it is. This is a candlestick pattern that signals bullish reversal. So in this case, we even had 3 indications of a buy, both the RSI, the CCI, and the candlestick pattern, right? So it's important to always double check for confirmations, okay? Check your chart patterns, check your candlestick patterns, ensure that the RSI and the CCI are all aligning. All right. Once the RSI and the CCI align, you can then enter the trade. Okay. For exits, you can use the opposite signal, a crossover back into neutral territory. For example, you could have entered a buy after we got these confirmations. After entering a buy, we could have set our stop loss below this swing low. And then as for our take profit, we could have considered using either the nearest resistance zone, or just wait for both the RSI and the CCI to cross back into neutral territory. In this case, the RSI didn't even enter into the overbought zone. It just got close to it and then started coming down back. However, the CCI entered into the overbought zone. So we would have just used the CCI crossing back below 100 to exit our buy trade. That would have been our exit signal for our buy trade. So we would have exited around here, and then let's say we entered around here, so it would have given us around 250 pips. All right, and then that is quite a good catch. Okay, quite a good catch. Now, a pro tip: this strategy works best in trending markets. Okay, it works best in trending markets. So, in as much as it can be effective in a range-bound market, it is advisable to use the strategy in a trending market. Okay. When you want, but when you want to trade a range-bound market, then you just have to be watching out for the support and resistance levels. Price bouncing off the support and the resistance level, up and down, and all of that. All right. So that is it for this video. I hope this strategy gives you a clearer edge in your Forex trading. If you found this content helpful, make sure to smash that like button. It really helps the channel grow. Okay, and if you are new here, don't forget to hit that subscribe button and turn on notifications for more trading strategies and tips. So let me know in the comments how you plan to use the RSI and the CCI together, or if you have any questions. Okay, I'd love to hear from you. Until next time, happy trading.